Terry James, your mortgage guy, coming to you. And today, had a couple questions, so I wanted to give some clarity on the situation. A lot of buyers just don't understand the difference between when a lender says that you're pre-qualified versus when you're pre-approved. So we're going to be going over the difference in that. And essentially, I'll break it down very simple. When you go through the process of, getting pre-approved, you're looking for a home loan, there's going to be two different things that are going on. So the first thing is that you can talk to a lender, talk to a mortgage expert, and you can say, hey, I'm looking for a home. They take you through the process, ask you some questions, income, assets, who's going on the loan. And the major difference between, being pre-qualified, what's considered a pre-qualification versus a pre-approval, the main difference is going to be is that this pre-qualified is going to be based off of what you say. So for example, if you say, hey, I make this much, I have this much saved up for down payment, closing costs, my credit score is, you give the credit score 700, whatever the case is. When we get into pre-approval, the pre-approval process, at least, and some lenders handle it different, but for pre-approval, that means that you have turned in your documents. That means that you have turned in all of your income documents, all of your bank statements, assets. Your credit report has been ran, so we have a current credit report. It's been reviewed, your income, all of this stuff has been reviewed. That's when you can get what's called a pre-approval. Now, there's also another thing which I had a client earlier this week ask about, what is an underwriting approval? What's the difference with that? So there's a lot of different things going on. So essentially, it's just different stages. Pre-qualified is going to be something that you do when, hey, I'm thinking about buying a home in a year. Where would I be? What's my purchase price? And so that's easy. We can calculate based off of what you say. You say, I make this much, I have this much debt. Okay, great. Based upon what you say, you're pre-qualified based upon this. Pre-approval is going to be turning everything in. Then underwriting approval. What that means is that we, as a lender, as a mortgage expert, we've taken all your income documents, we've sent them to underwriting, to an underwriter. They have reviewed it and they sign off on the document saying, based upon these documents, based upon this, you are conditional. What the technical term is going to be after underwriting sees it is conditionally approved. Because at that point, you're still probably going to need your purchase contract, homeowner's insurance, appraisal. So there's other little things to get a final approval. But the conditional underwriting approval is when we take everything you have, all your income docs, we send it to underwriting, they sign off on, and the first step is going to be conditional approval. Basically, in the last step, which is, to take you through this whole process, the last step is going to be final approval. So the final approval, you're not going to get until essentially everything in your file has been completed. So this is after you're in contract. Underwriting has reviewed your purchase contract. They've already reviewed your income assets. Your verification of employment has been done because that has to be done within a certain amount of days before you can close. And then title, all the title docs have been done. Prelim, everything has been done on your file, appraisal in, reviewed. So that's when you get what's called your final approval. As you get your final approval, that's going to be the point when loan docs can then go out and you sign your final loan docs at the signing table with escrow, with more than likely your realtor. And then and that's where you're going to sign your final documents, everything's set up, and now you're ready to essentially, once that's signed, depending on your signing day, or I'm sorry, depending on when you sign, you may be able to record in the county and then actually get your keys for the property on that same day. So it all depends on when closing takes place, when you can possess the property, and the whole end part, which I'll cover that later. But right now, we're just talking about the difference between pre-qualified, pre-approval, when you're pre-approved, and then when you're underwriting approved. And so those are the main differences. Those are the things to look for. What I would recommend essentially is that if you are looking to purchase within 90 days, or even, anywhere from 3 to 6 months, and you're going to actively start looking, the moment you say, I want to actively start looking for a place, which means, hey, you want to talk to a realtor and you want to go out and see homes, before you do that, you want to get pre-approved, not pre-qualified. You want a pre-approval letter saying from your lender, from your mortgage expert, that, hey, all my documents have been reviewed, income, assets, and credit has been pulled, okay? So you want to make sure that you have a completed application. All these things have happened if you're looking to buy within, my recommendation, if you're really serious about buying within 3 to 6 months, you want to get pre-approved off the bat, because you got to keep in mind too that the home buying process could take time, especially in this market. While we see it's kind of cooling off for buyers, it's still going to take some time to get an offer accepted, to find the right home. So you want to get pre-approved. And I would even recommend, what I do for a lot of my clients is we go ahead and go to underwriting off the top. So as soon as you say you want to buy and you want to start looking, we get everything and you have a conditional approval letter. That's one thing that not every lender will do. Especially if you don't have a signed contract, if you're not in contract. Some lenders are not able to send your file to underwriting. So these are the questions that you definitely want to ask, because there's going to be a difference between a mortgage expert looking at your file and then underwriting. The difference is that now that underwriters have reviewed your file, so when you get a underwriting conditional approval, you are now able to go into the marketplace and even put an offer and say, hey, I can close in 10, 12 days. I've already been underwritten. Underwriter has already signed off on my file. I can now offer quick closing. I can offer a fast close, and it helps with your offer to say you're underwriting approved. That's going to be a big difference. You get another letter that says from underwriting, it's a conditional approval letter. That means that underwriters have already reviewed your file. You're ready to go. All you need is an accepted offer. So if you're really serious, I do that with most of my clients. We're able to get that in and go straight to underwriting. Like, let's get everything in. If you want to buy, get it in, and we're ready to go. All right, so that's kind of the process. I know there were some questions. Like I said, I had a couple conversations this week just talking about that. And so if you have any questions, make sure you hit like. Or if you have questions, make sure you leave a comment, DM, send me a message, and make sure you hit like and subscribe to the channel. All right, until next time, take care.